On the program today, our conversation is going to be on corporate governance at the Nigerian capital market. We'll be looking at the capital market and examining the issue of corporate governance. Of course, we know that the Nigerian Stock Exchange, as well as the Securities and Exchange Commission, has tried to do a lot to ensure that companies listed on the Nigerian capital market actually imbibe corporate governance. But as much as companies imbibe corporate governance, do the stakeholders understand what they should be asking in terms of the corporate governance of the companies they have shares in? Well, those and more are what we're going to be talking about on the program today. I'm being joined by the General Secretary, Association of Stockbroking Houses of Nigeria, Mr. Akeredolu-Ale. Good morning, Akin. Thank you so much for coming in.
Thanks for having me.
So let's talk corporate governance. Looking at the way the capital market has been in the last couple of years, post the 2008 financial crisis, how would you describe the level of corporate governance?
Well, I think the level of corporate governance in Nigeria has really improved. And we should not forget the fact that, you see, if you look at other climes, like the United States, they have this Sarbanes-Oxley that, guides the corporate governance. If you look at South Africa, you see the Kings 1 and 2 in South Africa. If you look at UK, you have cadres there. But for us here in Nigeria, we have the SEX Code of Governance, which is quite flexible in the sense that it's more of a carrot and stick arrangement. There's no enforcement really in it. It's to encourage people to comply to corporate governance ethics and codes. So for the stock exchange coming up with this corporate governance rating system, it's a welcome development. The market has really improved in corporate governance. The transparency is higher. The level of compliance to listing requirements and post-listing requirements is now very effective. And also, one of the key things, again, is the issue of when the results come out, whereby there's always a gap before it gets to the market. That gap has been closed totally. As the results come out, we get to the market, and the market can react to it.
In real time?
In real time. So the governance level on quoted companies in the market has really improved.
Yeah, but then let's talk about the challenges. In spite of the fact that it seems to have improved, let's talk about the challenges in terms of the level of this improvement that you're talking about. For the business operators, the Nigerian Stock Exchange is talking about streamlining framework and guidelines for all operators with regards to corporate governance in their companies. Why is that?
Well, the truth about it is global best practice, and if we are saying that we're going towards globalization, and we want Nigeria to be one of the leading markets in the world, we will just have to comply to the various governance and requirements. Don't forget that corporate governance has to do with the structure of those companies itself, vis-a-vis the stakeholders that are related to all those companies, and also the management side of it. And you have the corporate social responsibility side of it too. All those things are the things that are put up into consideration when you're looking at them, governance in the market. And on the other side, because the fact that it is not fully enforceable, you have to encourage people towards corporate governance. It makes it a little bit tacky. But when you see the benefits of adhering to corporate governance, then you want to toe in line with the corporate governance requirements.
Because you'll be wondering why does the NSE have to twist companies into ensuring that they practice good corporate governance in the organizations. I mean, it's a given that you have to be transparent and accountable to the people that have you're responsible to, for instance, shareholders and the market where you have listed your equity on.
Yeah, I want to correct what you just said about arm twisting. The stock exchange is not arm twisting companies to comply. What the stock exchange is doing is to encourage people to comply, and the people that are complying are being compensated for complying. Now, compensation does not mean cash or anything. It means recognition. Because, for example, for some companies now, which some people are looking at that are now like super blue chip companies on our market, when the result comes out as a particular day, we get it on spot in the market. So people can really rely on transparency and information dissemination. On the issue of financial accounts that are forwarded to the exchange, the quarterly accounts, most of them don't breach the dates that's required for them to forward their quarterly statement to the exchange, which is also forwarded to our members to react to. Also, in some cases, when the results are even negative and not good, it actually encourages them to bring all their results forward so that the market can look at it. If it wants to punish it, and it will still come back to base. Yeah.
But for the stakeholders now, a lot of them understand that they should hold their companies accountable in terms of practicing good governance. Why is that? Whose fault is it?
Well, you know that this is a global norm that's just coming into the market and coming into Nigerian market too effectively. So, and like I said, it's not enforceable. But really, if you look at it from the top, it's the board of directors that's supposed to be the custodian for any governance of any company. And the board of directors now, what the governance is encouraging is that there should be independent directors in every company, and the issue of separation of powers from the executive to the board is being put in place, and the compliance at the management level to the corporate social responsibility to your stakeholders like the staff, your immediate environment and all that. The buck stops at the board of directors table, and the new directors that are coming into the market are people that are highly responsible and very, very conscious of the fact that we're trying to adopt the global best practice, which is what is available all over the world now.
So what's our stockbrokers actually doing to encourage, more investor apathy, so to speak, in terms of understanding what corporate governance is really all about? Because you see, sometimes, yes, the organization in question will try to, educate their stakeholders on what corporate governance is all about, or some even take, that further step of trying to understand it by themselves. But the stockbrokers also have.
There's a particular part of the market that has to do with designated advisors too. Okay. The designated advisors are people that are supposed to midwife, encourage quoted companies, and the ones that want to come in for quotations to adhere to corporate governance and requirements. And also, for every quoted company, there's always a dedicated stockbroker that will always be giving them investment advisory positions and all the time, and advise them on what to do on compliance with the market, when they should come for facts behind the figures, if their accounts is due, when it should be put in and all that. Brokers do that regularly. The brokers are assigned or attached to these various quoted companies, advise them, the board of directors, on these issues.
But then Ashon too should also be doing something in terms of educating stakeholders as well.
The truth about it is that one of the things that the stock exchange is just coming up with is what's called the minimum operating standards. And one of the things that they focused on heavily is the issue of governance, structure, and all that. And that also would dovetail into brokers being able to encourage them quoted companies on the issue of corporate governance in the market. Also, the stock exchange has also done quietly the issue of whistleblower.
Yes, yeah, I remember, because I actually have my whistle.
They've done that, the issue of whistleblower and market. They've encouraged, they are passing out to Central Securities and Clearing System too, whereby investors are fully protected, and if there are any issues, so that all those issues that have a thin line like insider trading and all that do not exist in our market, and there's no market abuse in any way.
But then you see, like you just talked about that insider abuse, for instance, there have been cases where it's actually come up, and sometimes the whistleblower in question might not want to blow the whistle because he feels that there isn't any enough punitive measures being meted out to such companies that actually perpetrate insider trading. Well,
for now, I don't know any insider trading that's occurred in our market. There's on records one. But I've seen the document that's been prepared to protect insider traders. That's people that give, not to protect insider traders, the people that whistleblow to protect them. And if what they have now in the market, in the stock exchange, is that everything is online. As the results are coming, it gets to the market. As it gets to the market, it gets to our members. So I don't know of any insider trading in our market for now.